Welcome to the Mortgage View. I'm your host, Karen Grafton. Thank you for joining us. I've been blessed to be in the mortgage industry for almost 20 years. And today on this call, we have 5 of extremely high producing loan officers that closed close to $1 billion altogether in 2020. Today, we're going to talk about opportunities that exist in today's current marketplace in the mortgage industry. The mortgage industry has been ups and downs, but with every market, there are challenges and there are opportunities. And today we're going to talk about the opportunities. Please know that we're streaming live to all of our platforms. So there will be an opportunity to ask questions, and we welcome the questions. So let's get started today. First up, we have Jessica Dowd and Christy Hardy, and wanted to ask you guys the question: what's going on in this market? Where do we come from, and where are we headed? What's going on right now with when you're looking to purchase a home?
Hey,
hi everybody. Hey, Jess.
Go ahead and introduce yourself, guys.
Sure. I'm Christy Hardy. I work in the DC metro market. So Virginia, DC, Maryland, West Virginia is my territory. And I've been a loan officer for 18 years and I love it.
Jessica Dowd, and I am in Virginia Beach. I am licensed in Virginia Beach, North Carolina, Virginia, North Carolina, Maryland, and then also randomly Oklahoma. And looking to get licensed in Florida too, just trying to expand as much as we can to help as many people as we can.
Absolutely. So yeah, tell us where are we coming from in the last couple of years, and where are we now in the mortgage industry? What's different about this market, and where are the opportunities for buyers?
I'll start.
I was going to say, I'm going to let Christy start. I've got a jet. Being in Virginia Beach, I do have jets flying over, so I'm going to mute myself while this one goes by and then hop back on.
Yeah, I'll get it started. So right now is like a very unique time in history to actually gobble up some properties. We know that there's an inventory shortage, so there is a very good chance, at least in our markets, that the values are not going to go down. And they may get a tiny bit soft, but ultimately the market is going to remain very strong as far as house values are concerned. There's a lot of big investors that are coming on the scene that are gobbling up the properties. So are you going to let them buy the properties? Are you going to get off the fence and buy them yourself and start making some wealth for yourself? So great opportunity to buy. It's an opportunity to get, and we'll talk about this later, I'm sure, to get some seller credits. So you can help buy your rate down. There's all sorts of things that we're going to talk about today that you're going to see that now is a great time for an opportunity.
Right. I mean, coming off the last couple of years, if you were a buyer, what were you experiencing when you were looking for homes? Like, what was it like?
It was crazy. Like we're starting to see it again. So beware, because this past weekend, multiple offers on lots of offers that were made. You're going to see what you saw in the spring was crazy. Literally, I had a client who offered $300,000 above asking price and did not get their offer accepted.
Well, so that was last year at this time.
Spring, yeah, that's 2020 spring. The market was insane. Rates were low. There was no give. There were no concessions allowed, meaning you just were going to have to make an offer and pray that you got it and compete. There was no room, no space for first-time home buyers. But luckily,
okay, so that was a year ago. What are we looking at now for first-time home buyers?
It's the year of the first-time home buyer, 2020.
There, she said it. I agree. The year of the first-time home buyer. And why is that?
I would say because the opportunities that Fannie Mae and Freddie Mac have created for first-time home buyers, stemming from stuff that they've done over the last 2 years, which is eliminate loan level price adjustments, meaning if you're a first-time home buyer, you're going to pay a reduced interest rate, a reduced private mortgage insurance, expanded loan to values, and there are grant programs available. So there is just the plethora of opportunities for first-time home buyers to enter the market. And in turn, Fannie Mae and Freddie Mac have actually increased the pricing on investor pricing, second home pricing, to kind of ward off those buyers from scooping up the lower priced properties that a typical first-time home buyer would purchase.
That makes sense. So where are you, in terms of first-time home buyers making offers? I know that in some certain pockets, you're seeing like a lot of competition for homes, but are there certain pockets where, they can, first-time home buyers can actually get a contract without, potentially waiving their rights to like appraisal and, contingencies and things like that? Are you seeing any credits that they're able to get through the seller?
Anybody want to take it?
Absolutely, I'll take it. I mean,
All of us be so quiet. Like,
I know, right? Speak up, ladies. Come on.
Prince William County, we're seeing it finally. Thank goodness. I mean, we're still a little low on supply, but the grant programs are just pouring in right now. We're getting all kinds of great news on that front. And I think with, even though the rates are a little bit higher now, maybe a lot bit higher, people are still willing to give them up, to move up. They've got a lot of equity in their properties, which means they have a lot of equity to give, a buyer for closing costs, maybe to even reduce the sales price since they're going to be getting it at the other end. And we need our first-time home buyers to come out in droves. We need you guys.
Mm-hmm.
Absolutely. Jessica, when you're in Virginia Beach, what are you seeing there in terms of first-time home buyers being able to purchase, or just home buyers in general?
Yeah, I mean, well, just to kind of piggyback what Laura was saying, I have a closing today for a VA buyer where we use the Virginia Housing 2% grant that they can use the grant towards closing costs, rate buy down. And most of my buyers for the past couple of years have been using all of those funds towards closing costs because they haven't been needing to pay their own closing costs, and the rates have been good. So in this situation that we're closing on today, actually the buyer was able to get all of their closing costs covered by the seller, every penny. So we used the additional 2% grant to just buy their interest rate down as low as we could. And then they still had money left over. And we used that money because on a VA loan, you can use any additional funds towards additional rate buy down, debt reduction, things like that. So that's where the shift is, right? I mean, so we went from pay off debt. They got their money back from their EMD. I mean, they basically they bought a house with no money technically out of pocket, everything covered by the seller.
It's somebody like you, Jess, that's seeking out those opportunities, and like the rest of us at Atlantic Coast, we are professionals and are on the front end of all these opportunities for first-time home buyers. So it's not a call center that you get somebody on a 1-800 number. We are actually being creative, thinking outside of the box, and utilizing all of these tools to your buyer's advantage.
And they actually came to me from another lender, and they were perfectly fine because they had their closing costs covered, and their agent actually said, just have another conversation with Jess, talk to me. And she was like, wait, so you're going to give me a lower rate, and I'm going to get money back, and I'm going to get to pay off some debt, like just because I did exactly that. I looked at what they could qualify for and thought about it a little bit differently than most lenders out there are. I think most, a lot of times everybody's you kind of become a number and you start to get pushed through the system and just do the standards of the guidelines and the loan programs instead of actually seeing and making it. That's my favorite part of our job is like finding new quirky ways to make it work and like all the best things together.
Yeah. So can you speak to that a little bit about, the advantages of using an experienced lender or a lender that's local? Like what are they?
I mean, I think the number one is that we're available nights and weekends. I think that's when we really have our time to shine, is that we're actually the ones that are available when they're out looking for homes, when they're actually out shopping. I mean, most people aren't shopping during the day. Most people are working during the day. The time that they have to go out and look for homes with their family and their agents is nights and weekends. So to have someone that can run numbers for them, explain the process to them, help get the information to them quickly on how they need to negotiate to get their offer in quickly. So they're not the third or fourth offer coming in either that day or days behind someone else. I mean, I don't think there's anything that tops having a local lender besides the knowledge, just the availability that we have to be able to buy.
And the reputation of getting it done and getting it done quickly. And not to mention, we are calling on behalf of the buyer to the listing agent and pleading their case and letting that listing agent know we've done our due diligence and that they are a solid buyer and we can perform on the promises that we're making.
Also, we're accountable. Like we have, we're accountable to these agents and to our local community. So if you've got someone in your local community like us working on your loan, we're going to run into these people at the grocery store. This is our reputation. This is our lives. This is our careers. We're not going to let a loan not close. But if you're dealing with someone, in California, who doesn't know this local market. They're never going to see anyone again. There's just not that same amount of accountability.
Absolutely. Yeah, I like that. What about you, Gabby? Tell us where you're from and what's going on with you down there.
Yeah, I'm Gabby Tripp, and I'm in the Charleston, South Carolina market. I get to serve South Carolina, North Carolina, Virginia, and Florida. And I run a wonderful branch down here. Yeah, that's me in a nutshell.
Awesome. What are you seeing in your market in terms of, are buyers able to get in homes? Are there multiple offers? And what kind of tricks do you have up your sleeve to get them in the door?
Oh my gosh. Yeah. So like these other ladies have said, we are definitely seeing the last couple of months just such a shift in our market in terms of inventory and just a wonderful opportunity for buyers of all walks of life to get in on homes that they would not have been able to spring market last year. We're seeing a lot more use of grant programs. We have a state housing program that we use here in South Carolina that, helps with down payment assistance and closing costs, just like a lot of other states. And I would say, I'm just going to say it. The biggest trick up our sleeves right now is the 2-1 buy down, which is helping not only first time home buyers, but like I said, people that are buying second homes, conventional homes, FHA, VA, we're able to use it with lots of different loan products. And, if you don't know what that is, it's essentially having the seller pay for this program out of the equity in their home, that they're giving in terms of closing costs, that helps the buyer get a 2% lower interest rate for the first year of the mortgage, and then a 1% lower rate for the second year of the mortgage. And they can refinance, throughout that term. So it's pro for the buyer, and all of these ladies here, I know that we're, advocating hard for our buyers and agents with this program, because it really does, tremendously save our clients, in their monthly payment and interest over those first 2 years. It's dynamic.
It helps them ease into the payment. For instance, I had a buyer that has a child in daycare and they're paying $3,000 a month in daycare expenses, and that child will be out within the next 2 years. So once that payment gets up to the 6% interest rate in years 3 through 30, it's much more manageable for them. So it's a not one size fits all situation. However, it seems to be fitting a majority of our buyers' needs right now.
What is that expression? Marry the house, date the rate. What do you guys think about that?
It's great. Right? I love it. I think that, a lot of it rings true. Don't look at the rate. If you can afford the payment, Jess and I were talking about this earlier. If you can afford the payment and you love that house, now is the time to get in, because you can get your home inspection, you can get your closing costs paid for. And let's think about it. If you couldn't get the home inspection 2 years ago or a year ago today, and now you're in that house and you're seeing all the issues pop up that are high ticket items, high dollar items, now you have the ability to get those paid for by a seller. So in the long run, think about how much that difference in payment really matters when you have this ability to, walk in and turnkey into the perfect home.
Yeah, well, incomes are higher now. The incomes are higher. It's a 30-year loan. It's not a 30-year commitment.
Right.
I mean, I'm the oldest one on this call, guys. I bought my house in 1993.
Fabulous.
So, how many times have I refinanced? At least 5 or 6. And at one time I was looking at my settlement statement. I personally had a 2 7/8 10-year loan at one point that I refinanced. Because I wanted to take the equity out to, put in a pool, to do a kid's college, to do all those things. So, rates really aren't the driver right now. When rates go up, prices go down. So it's all relative.
Yeah.
I mean, I say to my buyers the same thing. I joke that I say it to my kids too. I'm not going to ever tell you to do something that I wouldn't do or haven't already done myself. And currently, I just closed on a house back in December. I bought a house in this market. The rate wasn't great. It is what it is. We all know it, right? But there was a part of my neighborhood that I wanted to move into, like a type of house I was looking for. It became available. I had access to it because, just like we've been talking about, there aren't there weren't a bunch of different offers on the property, and I was comfortable with the payment, and I just did it. I was like, I'm going to go in, I'm going to jump in, I'm going to get this house. I love this house. I'm comfortable with the payment. And then when rates come back down or things adjust, then we'll adjust and make it work, to work better to my advantage. But I was comfortable with my payment, and I wasn't going to lose that house or the opportunity to get into that house or in that part of the neighborhood. over a rate.
Right. I mean, your home is more than just, your monthly payment. It's, your kids and your lifestyle and all that stuff. So
Right.
absolutely.
And plus, if you rent, you're paying somebody else's mortgage. Like you're going to $20,000, $30,000 a year paying rent when you could pay your own mortgage
Absolutely.
down.
I kind of tell my buyers like that first payment that you're getting is the worst case scenario, right? Because it can only improve from there. So if you're comfortable with it and it is affordable for you, obviously we know that because we're working on your file. But if it's not that picture perfect mortgage payment, that's okay if it's your perfect house, for you. So if you think about it in that terms, like, oh, this is the worst it could get. Obviously your tax and insurance can change over the years, but there's always that potential to refinance and get a lower payment later on when owning that home.
Yeah,
for those first-time home buyers out there, you automatically start naturally budgeting once you have a mortgage, and you start seeing, what your monthly expenses are and where to cut back on certain things and what you can, currently afford along with your mortgage.
Absolutely. So Ashley, can you tell us a little bit about I know we talked a little bit about seller's concession, but how to use seller's concession to your advantage and why it's like a key element of the transaction?
Absolutely. So as we've been mentioning, and especially in this market and this time of year, typically sellers that are selling in the winter either relocating or have a situation where that's making them, move versus sell in the spring market when there's more curb appeal, et cetera. So you, as a buyer, would have a little bit more of an advantage. And that's going to give you the advantage to have a seller subsidize your closing cost. In some cases, buyers right now are getting a reduction in purchase price in addition to what Gabby had mentioned, a 2-1 buy down, closing cost credit, et cetera. And if you're doing under 10% financing on conventional, you can get up to 3% back from a seller, 3% towards your closing cost. And again, that can cover those buy downs, et cetera. And then you can get as much as 6% if you put 10% down or more. And again, this is why it's so important to work with someone local who knows what they're doing so that we can work with your realtor and align ourselves to determine how much those costs are prior to you writing a contract so that we don't leave a dollar on the table and we utilize every possible angle to get as much for you as a home buyer as possible to cover those costs and to make the entire transaction both a pleasure for the seller and the buyer.
Yeah, absolutely. I mean, you got to look at it like you're partnering with the lender, especially one that's giving you good advice like that, versus just, if you just feel like lenders are, they're not all the same and they're not all created equally.
Absolutely.
Some are going
And
to help.
Yeah, Karen, I was going to add to what Ashley just said, and you triggered it, is, the rates are actually, you can buy the rate down permanently, not just on a 2-1 buy down.
Agreed. I love that.
I was saying, I couldn't wait to get it out because I'm like, a lot of people are saying, oh, wow, rates are 6 and 7%. No, I mean, if you pay a full point, you can drop that rate 0.5%. So it's really advantageous right now to maybe look at not putting all your money down. Maybe you put some money in points. Maybe you pay some PMI up front.
Mm-hmm.
That's why you need this kind of experience.
Yeah,
right.
All the different angles out for you and let you look at them on a spreadsheet side by side, so it's very clear what it's going to
Exactly. I mean, I think it comes down to what is most important to the person buying the house and what their goals are. Short term, long term, and so you really don't know that if you don't get to know them. And you're just someone comes up to you and says, "What's your rate?" And it's like, "Well, what are you trying to do?
Right.
Let me get in there and investigate and try to give you some options." Awesome. What does anybody else want to talk about seller's concession? Anything else to add in that regard? It seems to be a big advantage now to partner yourself with a lender that knows what they're doing to help you navigate the best deal for yourself long term.
I want to say one thing about seller concessions. Actually, sellers like that too. You want to know why? Because it keeps their prices where they were, so their neighbors aren't mad at them for selling, maybe reducing the price, $30,000, and they'd rather give you the $30,000. You know what I'm saying? So I'm exaggerating, but it keeps the value, because that's what's good for everybody. We don't want values to drop.
That's actually a really good point because Laura was saying it triggered. I think Ashley and I are on the same thought pattern. It's some clients will be like, "Oh, I'm going to reduce the purchase price by $10,000." Why would you do that? It literally is giving you like the most minimal adjustment in your monthly payment. Rather keep the price where it is, take 10,000 in seller credit and help, get your lender to strategically apply that $10,000 to permanently buying down your rate, covering your closing costs, doing a 2-1 buy down, using
Covering
that.
HOA dues. You can cover your condo or HOA dues for 1 or 2 years, depending on the loan program.
Absolutely.
Yep.
Good one. Yes.
Yeah, I do like that. I don't think people know that. I think they think that, reducing the sales price is equal to buying down the rate. And there's so much more on your monthly payment if you buy down the interest rate.
Yes.
So, what are some of the other hot products that are out there right now that people, are drawing people's attention?
I think just our like state funded programs are great. Like we talked about, different states have different programs. So like you'll get different, state programs in Virginia versus South Carolina and North Carolina, but they can help towards down payment assistance and closing costs. In terms of, not just first time home buyers, but Home Ready and Home Possible are wonderful products that you don't have to be a first time home buyer for those. They're actually income level program. So you have to be within, in most programs, 80% of the area median income to qualify for those, but it gives you a reduced interest rate and reduced mortgage insurance. That's a big one that I use for a lot of buyers.
Absolutely. Yeah, we're seeing a lot of that. What else do you guys have?
Well, a lot of people are afraid to sell a house without, before having another one picked out. So we are doing some bridge loans again. People have equity. So we're bridging the gap. We're saying, look, we'll advance you the money. We'll advance you the equity. You go ahead, buy your house. And then when you sell the house, then we can go ahead and pay off that loan, for you. So it's allowing sellers to make that move without, being worried about where's my family going to go if I sell my house.
Yeah. Well, and I think
I will say
now is that more people have equity now in their homes than probably ever before. So those bridge loans are actually being able to be used versus seeing that they're out there, but not really being able to take advantage of them.
And it's not even within our same states. ACM has such a big footprint that I'm able to help so many clients from different states, with those type of programs. So if you're moving from one state to another, check with one of our wonderful LOs to see if we can help facilitate a bridge loan in that state.
Absolutely.
Yeah, absolutely. I mean, I think, well, with the bridge loan, what I've noticed too is that people tend to, not think about necessarily moving until they see the house that makes them want to move. And then all of a sudden they realize, gosh, I don't have my sort of finances in order in the sense that I need the equity for my house to buy. And so they don't realize that they can go ahead and make that purchase without selling first. So
I'd like to add one thing real quick on first time home buyers and those, who are looking to enter the market that have been shy because of credit. Fannie and Freddie, starting May 1st, will have changed the loan level price adjusters to assist those that have lower credit scores. And something that we do and do phenomenally at ACM is credit repair. So if a buyer fills out a loan application with us and we analyze their credit, we can tell them exactly what they need to do to get to where they want to be. And there are certainly programs as low as, a 620 score that are going to yield very similar rates to someone with a 740 come May 1st. So just so you know, we're on the cutting edge of all the new changes, and we will be here and ready when your buyers are ready, or if you're a home buyer out there looking to align with us.
That's awesome.
Yes, and you don't have to necessarily have a credit score either to buy. There are a lot of programs where we'll take alternative credit, or the credit bureaus will help you create a credit profile. We stay very abreast we have a really great credit bureau that we work with, by the way. So if there's a mistake, or you need to rescore, or if there's something that you need to change, it's always good to get that out of the way now, because it can take 5 to 7 business days. So you don't want to be stuck in a contract waiting. But yeah, I mean, there's just a lot of ways to do things now. People think they can't buy when they really can.
Absolutely. Christy, can you talk a little bit about what you think some of the hot loans are?
Yeah, so right now, like we mentioned earlier, it's the year of the first time home buyer. So here at ACM, we are offering, starting this month, starting in February, we are offering grant funds that can be used in combination with any loan type. It can be used with the USDA loan, VA loan, VHDA, Maryland, DC, whatever. It can be used with any loan program we have. If you're a first-time home buyer and you make below a certain level of income, and we'll check it for each area because it is different based on locale. But we're offering a $12,500 grant. It can be used towards down payment and closing costs. And if you happen to be deemed essential during COVID, so we like to consider this like a community partner. If you're like a community partner, like a nurse, a teacher, a firefighter, police officer, we're offering $15,000 in grant funds, and doesn't have to be repaid. You just have to qualify for the income and the credit. But if you do, I'm doing one today. It's so exciting. Like we're lining one up right now. We're pre-approving someone. That $15,000 is going to make it so this first-time home buyer, and he also happens to be a police officer, does not have to come to the table with any money. Man, that's easy for you to say.
That's awesome. Thanks.
The grant funds are hot, especially here at ACM. I don't know of very many other places that are offering this kind of cash.
But you put a good point out there, Christy. You can piggyback it with other products. So like if you're doing, let's say VA, you have no down payment, and then you're coupling that with like VHDA, getting some down payment assistance there and doing the grant. Like you can literally domino this product, and it takes a very smart loan officer to set it up correctly, which all of us here at ACM, can have the strategy to do that. But if you do all three of those, I did one, it was USDA, so it was no down payment. We did the down payment assistance loan from the state, which got $8,000. And he was able to buy his rate down super aggressively with that. And we did the grant on top of it. He got his earnest money back at closing. Another example, like what Jess said earlier.
Yeah, it's really exciting. I know, like a lot of people, you're saying a lot of different acronyms, and people might not understand what each thing is. And really, you just have to reach out to an experienced loan officer that can, at ACM, that can help you with that. But it's really exciting as a loan officer to be able to offer all those things, because you're really helping people. Some people don't even know how great it is when you get all those things till they really see, the difference on how much money they needed at closing and how low their payment was compared to the market. So that's awesome.
Hey, Karen, I told my friends at Virginia Housing, I put in a plug for Spark.
Oh, nice.
In Virginia, we have the Spark funds where they reduce the interest rate on first-time home buyer loans by 1%.
So that's wicked low. That's
1%. Yeah, it's incredible. And in certain localities, you've got in Prince William County and Loudoun, all kinds of different counties north of the Occoquan. We have money that you can even get as much as 30% down.
So Laura, we actually have a question, and since we're live, I'd like to. What is the salary cap in the DC area for the grant funds?
Well, there's so many different caps, because you have one for the federal home loan, you have one for the Virginia housing, and then you have one for some of the localities. Some of them are based on family size. Actually, most of them are. But, they're going to take the lowest. So like what Gabby was saying, if you're combining funds, you're going to take the lowest cap so that you can get all three. So it's a hard nut to crack. They're very generous. They're very generous.
What about if you have two borrowers and one? Are you taking the family income or?
Yeah.
On the 12,500 and the 15,000, it is household income. Okay. And Christine, I know you're in my market. Thank you for asking a question and participating today. Around here, for most areas, it's around 89,000 or less. So around there, it's going to depend a little bit on family size and such, but that should get you started.
That's exciting. Really, this is really exciting stuff for loan officers that geek out on it. Ashley, can you talk a little bit about construction to permanent loans and what they are, real layman's term, and what we offer here?
Really just the crux of it. If you're a realtor out there that has a buyer, or if you're a home buyer looking to purchase land and build on the land, we have a one-time closed construction product. It's not really for somebody that's looking to just hold on to land. They would have plans and specs and be working with the builder within the first few months of acquiring that land. But we can do that type of financing and take them from acquisition of the land purchase all the way through to full construction. So it's a phenomenal product that not a lot of lenders have, and to work with a local lender that can close it all in one fell swoop is the way to go.
Absolutely. Yep.
Yeah, we're delegated. That's another
not to mention, we're kind of a one-stop shop in terms of products. So we have a lot of renovation loans too that are becoming popular because some of the homes that are there are sitting because they might need some upgrades that people want to make. So I would encourage people to reach out as well on the renovation stuff, because I think that some of the success stories that I've heard with people purchasing a home in a neighborhood they wanted to be in and then using the renovation loans to get to the house to the level that they want to live in has been really great for some folks. Any other products you guys want to discuss?
I just want to say, don't forget FHA. I mean, I know a lot of people are, kind of going towards the conventional, but FHA is, you can get loans down to a 580 credit score on FHA, and
Wow.
the rates are lower.
Yes.
So
Yeah.
when you're looking at the mortgage insurance factor, I mean, sometimes it is better to go conventional, but FHA is still a really viable product in this market.
Absolutely.
I can't forget our friends in our reverse mortgage department. So we do have reverse mortgages for your folks that are, going into their forever home at retirement. And somebody tell me the age when you can get a reverse, because I
can't learn. What's
the 62, 65?
Retirement age?
They are a phenomenal product, and we have a team dedicated just to that product. That's all they know. So we will refer you to them if you have anybody in need of a reverse mortgage.
Well, thank you, Ashley. I'm sure they'll appreciate that. Gabby, did you have something to add?
Yeah, so it's not necessarily a first-time homebuyer program, but it is a program that I use tremendously in my market. It's more for the affluent buyer. ACM has a fantastic 10% down payment jumbo loan for people buying it as a primary home or even vacation homes. And there's no PMI, no private mortgage insurance on that, which is very rare. It is probably my most used product, especially being in a coastal town like Charleston, and having it be a really hot vacation spot down here. We essentially use that, all the time. So that is something that is very unique to ACM, and it's not a product that is easy to find. So that is definitely, again, it's not necessarily for first-time home buyers. It's more on our jumbo side. But it is a wonderful and unique product.
Yeah, and 10% down to 1.5 million loan amount. I mean, that's unheard of. So
second home, so good.
Yeah.
Also, our doctor program. I mean, while we're there, we have a real nice.
Keep going with the programs. We got time.
Lots of loan programs right now.
Yep. Okay, great. Well, also, so I know we were going to talk a little bit about first-time homebuyer stuff, and we did cover a lot of that already. But my question's more around the mindset. Like, what do you think holds people back from purchasing their first home?
I think being intimidated and not super educated on the process.
Yeah.
Lack of education for sure.
Yeah.
Like, I think it's one of my favorite things to do. I love working, obviously, with all buyers. But I was a first-time home buyer before I got into this business. And when I looked back on it before getting into the mortgage business, I was like, gosh, I don't even remember what I did. I think I gave someone a pay stub and then signed some papers. Like, that was it. I don't remember talking to anybody about anything. So actually taking the time to sit down and, like I always say, I like to, my goal is to always leave my first-time home buyers feeling empowered and educated. And I feel like I do that successfully. I mean, I just had a closing last week. Oh God, was it 2 weeks ago? And the buyer, my closing, my girl, the title company, she pulled me aside after. She's like, I was really starting to panic because she didn't ask any questions and she was signing so fast that I was just worried as a first-time home buyer that like she wasn't understanding what she was signing up for, like all these things. I was like, oh no, we talked at length about everything she was doing, how it was working. We did a Virginia housing loan where she did a down payment grant, how much money she was bringing. I mean, she read through everything. We talked about it all. I love to answer questions about it to help that be where she lands. And she even said, she was like, I didn't even have to look at anything because I already knew what I was signing.
I love that. What a compliment to you, though. Seriously.
Well, but and not everybody wants to know everything about the loan process. Some just want to feel like that they can trust you and that they're not, you're not putting them into a position financially that will hurt them in the future, which is also something to be said for a first-time home buyer, where some people may not still understand it or want to ask a bunch of questions. But I think just feeling the confidence and understanding the process is a little less daunting and makes it more, they're more excited, less scared. So,
Yeah.
Some of the products, just like you were saying, they actually require the home buyer
Yep,
education.
that's true.
Oh, yeah.
So I mean, we're really good about telling people up front so that they're not scrambling and doing it the night
Yep,
before
same.
closing. It kind of defeats the purpose. So we're
Yeah.
getting it right up front. Look, this is what you want to do. You want to learn the budgeting aspect.
Yep.
Once you get into the house, if the dryer breaks, who's going to fix it. Those kind of things. So you don't have a landlord. You are the landlord when you buy.
Christy, can you tell me a little bit about what do you think buyers think is important?
So I think back to the first time home buyer thing, like 2 reasons, like their mindset. I think there's 2 myths out there. First time home buyers think that they need to put 20% down. Okay, as you can tell by our whole conversation today, you can do it with really no money down, our very small down payment. So myth number 1 busted. So you actually can get into a house easier than you can rent, probably, because you may not even need your security deposit and sign up, for all that stuff. So I just think that's number 1. The home buyers, the first time home buyers need to realize you don't have to stress about that. But also, one of the biggest myths is you think your first home has to be your forever home. It doesn't.
Right.
Yeah.
So I think it's very important for first time home buyers to realize this is a stepping stone. This is how you're going to create wealth. This is important. So everyone who is wealthy, the majority of wealthy people got there by real estate. Let's just face it. So it's just such a great way to get started. So think of your first home as a starter home and as a stepping stone towards building wealth. And that's it. Just stop with the negative mindset and get out there and buy a house.
That's great. Well, Christy, now that I have you too, we're going to talk to you a little bit about, becoming an investor, what you're seeing people use, unique ways to build wealth by real estate, and how do they get involved? What are the pros and cons of buying investments?
All right, great. So, obviously this is no secret. I'm passionate about investing. I've had several properties. I have several properties. I love it. I think it's just a great and exciting thing to do. Some people like shoes. I like houses. That's how I roll. So, what are some pros and cons? So the pros are, like I mentioned, you're creating wealth. You're going to be able to leave a legacy for your family, because it's, equity grows and grows and grows over time. Yes. Does the market go like this sometimes, up and down, up and down? Yes. But you stay in it long enough, the house is going to be worth double, triple, quadruple what it was that you bought it for. And you think about it, it's only a little bit of an investment. Let's say you need $10,000 to buy your first home. Okay, that's only $10,000, but guess what? In 10 years from now, that's going to probably equal to $300,000 or $400,000 in equity. So just the mindset really needs to change on that. That's a major pro. What are the cons? Someone else just mentioned this right here. You're the landlord. So when the HVAC goes out, you're going to have to come up with the money. So we also want to be very careful, and we look at people's income, we look at their budget. We do not want anyone to overextend themselves. That's why I'm saying use this first home as a stepping stone. Don't go over your limit. Don't go over your head. What's so great about that first home is you can turn it into a rental after 1 year. Mm-hmm. So you only need to own that house for a year, and then you can use the equity or whatever it is to buy your next home. You only need
5% down.
5% down to buy your next home. So it's such a great way to get started. So I would just say get started. And a lot of people now, there was just an article that was around, a lot of people in the DC Metro, they're happy where they're renting, like they want to stay in their cool neighborhoods, but they want to own something. So they're starting to buy Airbnbs. You can make a lot of money doing an Airbnb versus a long-term investment. So that's something else for people to think about too. It's a nice little side hustle.
And you can buy a second home in a destination area for as little as 10% down. So that's massive. A lot of people, just like you said, expect that you have to put 20% down when you buy a home. You can even buy a second home at the beach for 10% down.
And a second home doesn't mean you have to own a home first. It just means it's not your primary residence. So you can own what we call a second home or vacation home with 10% down somewhere really nice. And then you you've got that going.
Yeah.
So you also can buy an investment property with 15% down.
Yes.
We all say minimum 20 because that's kind of the best rate. But if you literally only have 15% down for an investment home, you can do a 15% down loan.
And another
Right.
thing you can do is buy with a family member if you want to start, helping younger family members or even older family members to buy a home and still kind of sharing an investment that way. I do a lot of that with parents. The kids are getting out of college. They don't want them back in the basement, so they're trying to find a condo or something, similar to that. There's ways to buy for your family member and still be an owner occupied residence when you're not living in it.
And take advantage of the lower rate.
Yes.
Yeah, I've seen a lot of people take a second mortgage on their place as a down payment on it for an investment or a second home.
Leveraging that equity in your favor, like Christy said, building that wealth, buying that starter home, and maybe you choose to sell it and buy another home, using that equity, or maybe you choose to turn it into a long-term or short-term rental, but you can do, HELOCs, like we like to call them, home equity lines of credits, pulling out that equity, retaining that property, and using that as a down payment to purchase another home. There's so many different ways that you can leverage that equity in that first home that you buy or second home that you buy.
Yeah, absolutely. So I think, what's on a lot of people's mind too, and when I talk to builders and realtors as well, is, really just trying to figure out, like, how do you get the lowest, payment for a house? If you want to get the lowest payment, Laura, what do you do? What are some of the strategies you can give to people to get the lowest fixed payment?
Well, there's a couple of different ways. Obviously, improving your credit score, that's number one, because we have these lovely little things called loan level pricing adjustments. Some people are, subject to them and some aren't. So improving your credit score always helps. Also, as far as the cheapest payment, private mortgage insurance. If you're doing a conventional loan, there's ways to pay it upfront in full. There's ways to finance it. There's ways to split it if you want to, but your higher credit scores have very, very low cost private mortgage insurance. So that's why I always start with the credit first. And then we mentioned this before, paying points to buy the rate down is another great strategy. Using grant programs, doing, a combination, because the more you can put down, the better. And then let's face it, some of your debt is not mortgage, right? Some of it is installment debt. Maybe it makes more sense to pay off the car and put less money down, maybe do 100% financing. So that's one of the budgeting things that we look at. And I think Jess has a VA example that she wants to give.
Like, I tell my condo buyers, those that are buying condominiums and their condo fee may be $350 to $500 a month, perhaps get the seller to pay up to a year to 2 years worth of condo fees so that your payment might be $2,500. Now it's more like $2,000. And that $500 is not tax deductible. So it's giving you the leverage to prepay it, not feel bad that you prepaid up front for those fees, either via seller credit or you just decided to pay up front instead of putting more money down. Because think about it, if you put an extra $2,000 down, it's going to have such a small impact in your monthly payment. But if you send it to the property management company and covered 2 years worth of HOA fees or condo fees, that's going to be so much more impactful to you monthly as a home buyer.
That's a great point. Thank you. Jessica, what were you going to say about the VA?
So
example?
VA, I feel like we talk a lot about mortgage insurance, on the private mortgage insurance, on the conventional loans. VA doesn't have the mortgage insurance, but they do have a one-time funding fee that you actually can roll into the loan instead of paying monthly, which is super great. And it's usually still more beneficial, especially right now with interest rates where they are, to still go with a VA option over a conventional option, even if you're putting 20% down. But just like we've been talking about all day, you got to have someone that's creative. And sometimes putting 20% down doesn't achieve the lowest payment. You think that it does, but it doesn't. So what I've started doing with my buyers is same thing like you guys have been talking about. I usually ask them if I have $40,000 to put down. Okay, so then I kind of reverse engineer it. Is it $40,000 to put down plus your closing costs, plus any rate? Like what's your final out of pocket cash to close amount of money that you want to be when you come to closing? This is where I want to land. And then how do we, and then put that into a payment. So I had a VA buyer who we just did. So the funding fee will adjust down if you put money down. If you put down 5%, it goes down. And then again at 10%. So what we actually did once he gave me his number was, I think it was $40,000 in total. We only put 8% down. We bought down the interest rate. We put 8% down, bought down the interest rate, paid out that funding fee instead of rolling it into the loan. And he actually ended up saving $300 a month versus doing any other traditional, just throwing it all at the down payment and paying closing costs. You know, when you just kind of start to play with the numbers and work it, it's not always just a flat down payment that's going to achieve the payment that you want to be at. You know, you need someone who's going to actually look at all the different quirky options. And then I always say, when I send it to him, like, all right, hear me out when I'm saying this, when I go through it with you, it makes sense. And then I still will show the opposite, you know, or if you use your money this way, here's what you're going to achieve. So you're saving this much money a month by going this option, using the same amount of money cash at closing.
Yeah, I had a VA buyer that thought he couldn't go on with a non-VA buyer, non-spouse. And he was able to because he was putting down 12.5%. And he thought he was going to be stuck in all these conventional programs that weren't as attractive because of his credit score. And I said, no, wait a second, you can still do a VA loan. And he was shocked. So, I mean, it's things like that, you know, that we kind of think outside of the box. You know, you're trying to apply for one thing because another lender told you that. And then we're like, wait a second, but you can do this. That's why it's important to bear everything on your application. Let us know the whole thing. Don't hold back. Who's in the background helping? There's always somebody back there.
And I think it's good to touch on what you just said, give us the whole picture. We actually, one thing we haven't touched base on is at Atlantic Coast, we are doing full approvals for pre-approved buyers. So if a buyer comes in and they're going to be competing the following weekend, we can have their loan fully underwritten and approved and provide them a full approval letter, which when you're entering this market that seems to be early spring and there are multiple offer situations, we can equip a home buyer with a full approval letter that makes it look much better and attractive to a seller because they've gone through the full underwriting process. So I think it's huge that we share that.
Well, and then couple that with the phone call to the listing agent and you're winning.
Yeah, I mean, the appraisal process too. I mean, everybody wants to know. They're all holding their breath. What's that appraisal going to be like? I mean, we're on it when it comes to the appraisals.
Yes, we are.
That's great. Can you guys? I know we talked a little bit about bridge loans up front, and that's a powerful tool. What are besides bridge loans? What are some other ways that buyers can purchase without selling first?
Just generally qualifying for both. You know, we can, you know, again, we, like Ashley said, we do the full underwrite up front. So we know for a fact, you know, can they hold both mortgage payments? If they are leaving a residence, we can put a renter in there, see if they want to turn it into a long-term rental. And, you know, we can use that income to offset that exiting property so that they can qualify for the new home. And again, that takes a lot of strategies to get that done. You know, when we're setting you up, we talk about hopes and dreams though, you know, like I feel like the first conversation I'm having with my client is like, what's the goal? Like, okay, you're moving, you're leaving this property. What is your long-term goal or short-term goal for that property and for the property that you're purchasing? So it's all about, you know, we have to strategically help you, you know, through that process and navigating it. And, you know, when they're leaving that exiting property, you know, they're going to have a large down payment. You know, should we put more down on the property that you're going to purchase? So there's different ways that we can help you strategize with that to make sure that, you know, you can carry both payments without having to access, you know, a bridge loan if you didn't want to or couldn't, you know, go through that loan.
Yeah.
We also can do a recast. So, you know, we have 2 options.
What is that?
So a recast is so let's say you have a house, it has $100,000 of equity, you haven't sold it yet, and your new house is going to cost $500,000. Ultimately, you want to end up with a $400,000 loan on the new house, not a $500,000 loan, for example. So you can buy the new house. When your current house sells, you can take that equity and apply it towards the principal balance on the new loan, and your payment will also reduce. So your new loan now would only be $400,000 versus $500,000, and
the payment is adjusted accordingly.
Yeah, so that's a recast. Typically, there is a waiting period. You can't do it immediately. So there are a few little requirements. Sometimes there's a super small fee, and it really just depends. But if someone's interested in that, we can make sure that we, you know, can work with long game on that.
I'm doing that on my. I just did that on my current purchase. Same thing.
Yeah.
I didn't want to move out because I was renovating my new home, so I just put the minimum down, and then once I sold, I'm going to recast. I mean, it's a really cool. If someone isn't there to educate you on it, you wouldn't even know that.
We also can do 2 loans. You know, there's something about that too, where we can do on the new purchase, you can do a first and a second trust. And then when you sell your current house, you can pay off that second trust with the proceeds, and then you're just left with the 1 loan. So we would just compare what's better off. You know, you can recast 2 loans or bridge or rent.
And it really comes down to what it's going to cost them to make it happen, right? I mean,
Each client's going to be a little different.
And we allow gift funds. So if a buyer has a relative that's willing to gift them funds and, you know, refund them post-closing from the sale of their home, we allow you to use 401k loans, and we, in most cases, don't count those payments against you. So, you know, home buyers don't realize you can get sometimes a tax-free loan or, you know, withdraw for a first-time purchase. So it's important to contact your 401k provider to determine what those, you know, ins and outs are of withdrawing funds from that account, because sometimes you can pay them back in 60 days tax-free. There's just a lot of little, you know, nuances that you can contact your provider and find out.
Yeah, I think that's another value that you ladies add, you know, to the buyer, is to really think through, like, hey, what's the cheapest way to make what you're trying to accomplish happen for you, you know, and here's some options based on, you know, the information that you're telling me. So without them having that, you know, partner, that lender partner to go through them, they could be spending a lot of money in the wrong direction without the good advice that you guys have. So that's important. What else do we have? Let's see. We are welcoming any questions from the audience. If you guys want to ask anything, we are happy to answer it as well. We talked a little bit about credit repair. Laura, did you have any? I think you had a story about it, someone that you had done credit repair for, or just basically our program here.
Yeah, I had a lady that she had one mistake on a medical bill, which, by the way, medical collections now, they have to be in collection for 12 months before they're placed on your credit report. But this was a while ago, and you know, she was so frustrated because it just kept getting re-reported, and dragging her score down. And finally, I said, look, you know, I got on a 3-way call. We got it figured out. That got taken care of. We actually got them to delete it. The person was, you know, like, okay, we can't keep re-reporting it now. And we had her open up a secure credit card. And in 3 months, she was able to have a credit score. She also added herself to her mother's credit card that was in good standing for many years. And that boosted her credit score up even more. And, you know, we just, you know, just kept hanging around for 3-4 months. And finally, she went from like a 560 credit score to a 700.
Wow.
Incredible. So it's just amazing how one little boo-boo, you know, look, if you are really on a credit card and had that account for many years, there's nothing wrong with picking up the phone and saying, look, I was out of town, the mail didn't get to me. Can I get a one-time courtesy, you know, removal? A lot of the credit cards do that for you. And if they won't, then they won't. But it never hurts to ask. And I would just say that, you know, don't let that one thing, you know, whether it be money, whether it be credit, whether it be, you know, where the rates stand, don't let anything stop you from achieving this, because there's so many good 100% programs out there besides VA. And you don't have to be a first-time home buyer to get them. Even when we haven't talked about Maryland, but I do a lot in Maryland. There are some Maryland programs where they even help you with your student loan debt. They help you.
I've heard of that.
Paid off. You know, so, you know, we're talking about mostly Virginia and Charleston because that's where the bulk of our business is. But, you know, we're well versed in, you know, we have Atlantic Coast Mortgage has lending capability all up and down the Eastern Seaboard. And because of the experience that we have in the company, if I don't know the answer, I can pick up the phone and call any one of these lovely ladies. And if I can't get the answer for them, then the answer can't be found.
That's right. That's right. Well, I appreciate all of you guys, and you know, thank you everyone for joining us on the Mortgage View. And we will be airing different shows, you know, throughout the year. So we look forward to a great year this year. Thanks so much.